A market is born, seeds of capitalism on the canals of Amsterdam. The air was thick with the smell of salt, spices, and money. The bustling markets were alive with the chatter of merchants and the clinking of coins. Amsterdam in the 17th century was a city high on trade. Ships from all corners of the world docked here, bringing exotic goods and new opportunities. The Dutch East India Company, a behemoth of global commerce, needed capital. It was a time when the thirst for exploration and profit knew no bounds. Merchants, flush with the riches of the Indies, sought ways to invest. They were eager to multiply their wealth and were willing to take risks. And so, on the cobblestones beside the Damrak Canal, the world's first stock market took root. It was a humble beginning, but it laid the foundation for modern finance. It wasn't fancy. No tickers, no CNBC. Just men, huddled in coffeehouses making deals. These were the early brokers, negotiating and speculating over cups of coffee. They traded shares of the VOC, pieces of the company that promised a share of its riches. Each share represented a stake in the vast and lucrative trade network. Fortunes were made and lost on the turn of a ship. The stakes were high and the rewards could be immense, but so could the losses. This was capitalism, raw and new. It was a system driven by ambition, innovation, and the relentless pursuit of profit. This wasn't just about tulips or peppercorns. It was about an idea that trade and investment could drive progress and prosperity. The idea that risk could be shared, that the future could be bought and sold. It was a revolutionary concept that transformed the way people thought about wealth and opportunity. It was an idea that would change the world, one trade at a time. The seeds of capitalism sown on the canals of Amsterdam would grow into a global economic system that shapes our lives to this day. From coffeehouses to Wall Street, the birth of modern trading. The journey of modern trading is a tale of ambition, innovation, and transformation. The seeds sown in Amsterdam found fertile ground across the Atlantic. The Amsterdam Stock Exchange, established in 1602, was the world's first official stock exchange. New York City, brash and ambitious, became the new stage. The city's energy and drive mirrored the aspirations of traders and investors. In 1792, beneath a buttonwood tree on Wall Street, a pact was made. This agreement, known as the Buttonwood Agreement, was a pivotal moment in financial history. 24 brokers signed an agreement that would lay the foundation for the New York Stock Exchange. This marked the beginning of a new era in trading, the NYSE, a symbol of American capitalism. It became a beacon of economic opportunity and growth, a place where companies big and small could raise money, fuel their growth. The exchange provided a platform for businesses to expand and innovate. The stock market became the engine of innovation, driving the rise of industries from railroads to radio. It was a catalyst for technological advancements and economic development. But with great power came great risk. The market's volatility was both a source of opportunity and peril. The market could soar to dizzying heights, only to crash back down to earth. The highs and lows were a testament to the market's unpredictable nature. The Roaring '20s, a time of unprecedented prosperity. The decade was marked by economic growth and cultural dynamism. Stocks climbed higher, fueled by speculation and easy credit. The optimism of the era seemed boundless. But the party couldn't last forever. The market's exuberance was unsustainable. On October 29, 1929, the music stopped. The stock market crash marked the end of an era and the beginning of the Great Depression. Black Tuesday, the day the music stopped. Black Tuesday, a day etched in history, forever remembered as the moment the financial world came crashing down. The stock market, already shaky, went into freefall, spiraling out of control. Millions of shares traded hands in a panic as fear gripped the hearts of investors. Fortunes built over lifetimes were wiped out in hours, leaving many in utter despair. The crash of 1929 wasn't just about numbers. It was about people, their lives, and their futures. Families, once comfortable, were thrown into poverty. Dreams were shattered and hopes were dashed. The American dream itself seemed to falter as the nation struggled to find its footing. The crash exposed the dark side of the market, its capacity for both creation and destruction, its dual nature. It was a stark reminder that what goes up must come down, a lesson in the volatility of life. But even in the depths of the Great Depression, the stock market endured, a beacon of hope. It limped on, a symbol of resilience, a testament to the enduring belief in a better tomorrow, a brighter future. The Enron implosion castles built on sand. The Enron scandal of the early 2000s was a different kind of disaster. It wasn't a sudden crash, but a slow-motion implosion built on deceit. Enron, a darling of Wall Street, a giant in the energy sector, turned out to be a house of cards. Their profits were a mirage, their books cooked with creative accounting. When the truth came out, it sent shockwaves through the market. Investors once again learned a painful lesson. Trust, once broken, is hard to rebuild. The Enron scandal wasn't just about corporate greed. It was about the failure of regulation, the dangers of unchecked ambition. It was a reminder that even in the most sophisticated markets, the human element, with all its flaws, remains.